A central bank is a special bank that helps control a country's money. It makes sure there is enough money for everyone to use. Central banks help keep prices stable. This means they try to make sure things don't get too expensive or too cheap. They also manage interest rates, which is the cost of borrowing money. Lower rates mean borrowing is cheaper. Central banks also keep an eye on the economy, which is how people buy and sell things. One important job of a central bank is to issue currency. That means making the money that we use. They work independently from the government, which helps them make fair decisions about money. Central banks often lend money to other banks to keep the money flowing in the economy. They make reports to show how the economy is doing. These reports help everyone understand the money situation. Central banks help protect the financial system. They make sure the banks are safe, so people trust them. In some countries, central banks also help control inflation, which means keeping prices from rising too quickly. They can be different in each country. Some central banks have unique names like the Federal Reserve or the European Central Bank. Central banks also work together with other banks around the world to keep global money safe. They use tools like reserve requirements to decide how much money banks must keep on hand. Central banks plan ahead for the future. They try to guess what the economy will look like so they can be prepared. By keeping everything balanced, central banks help everyone live better by managing money wisely. They play an essential role in making sure the economy runs smoothly and everyone has what they need. People rely on central banks for money security and economic stability. They are very important. Understanding central banks helps you know more about how the money in your pocket works.